Hello and welcome, and thank you for joining us on Business Incorporated. I'm Chimeze Obi Iwagu. On the show today, the second edition of the African Investment Forum begins in Johannesburg, South Africa. And the government of Sudan says it needs up to $5 billion in budget support to prevent collapse. And the UK escapes recession as the economy grows by 0.3% in the third quarter of the year. Let's get the show started now with the markets. And beginning from here in Africa, the Nigerian equities market is closed today for the Muslim holiday. However, most of the markets we track here were mostly in the red at intraday. The JSE index in South Africa fell 1.09%. Egypt was down 0.06%. Meanwhile, Kenya closed negative, slipping 2.77% on Friday. In the Gulf region, positive sentiment trailed most of the markets except Abu Dhabi. The Dubai index rose 0.51%, led by gains in Emma Properties, reporting a 20% rise in profit for the third quarter. On the flip side, Abu Dhabi's index was down 0.12%, with Emirates Telecommunications shedding 0.6%. In Qatar, the index edged up 0.39% as Industries Qatar added 1.1% and Qatar International Islamic Bank up 0.23%. Saudi Arabia's index was up 0.28%. And in Europe, stocks traded lower in the morning amid a dampening of optimism over U.S.-China trade after U.S. President Donald Trump denied that he had agreed to roll back tariffs on Chinese goods. And of course, there are other news coming out from the blog, and Chelsea will bring us up to speed with those. Hello, Chelsea. Good afternoon. Well, the new European Central Bank President Christine Lagarde will hold her first Governing Council meeting on Wednesday, and already EU monetary policy makers are calling for big changes in how the central bank makes policy decisions. So what do her new colleagues want to change?
Christine Lagarde is really under a lot of pressure right now, and one of the core criticisms of the ECB's policy-making process is that it's not really a consensus, that unlike the Federal Reserve, unlike the Bank of England, the ECB doesn't make decisions based on votes, and they don't publish any sort of information about how the EU member states really feel about the policy decisions. This has really come into the spotlight after Christine Lagarde's predecessor, Mario Draghi, in September decided to restart monetary easing and to restart bond buying. That has been very, very heavily criticized here in Europe. There's a lot of people who think they shouldn't have done that. And it sort of started this discussion over how much of a role other EU states are playing in the decision making of the ECB. So what these other national governing council members really want is they want for the ECB to vote on its policy decisions. They also want to have a broader discussion of how the ECB sort of announces its policy decisions to the markets and to the public, because in the past, Mario Draghi sort of was a one-man show. He would sometimes make decisions without talking to other member states. So they're really trying to push for more cohesion and more discussion and more input from other member states in the ECB's decision-making process. And that's expected to be one of the topics of discussion at this first Governing Council meeting on Wednesday.
All right, let's look at the corporate world. Daimler is reportedly planning to cut about 1,100 management job cuts. And of course, the company is expected to outline more cost cuts measures at an investor day on Thursday. What's behind the cost cutting push?
Daimler has been discussing the need for pretty significant cost reductions over the past year. They haven't really given a lot of details, but we're starting to see the first discussion of that, and we're expected to see a lot more detail on Thursday whenever they have their investor day in London. They have, according to some media reports, said they could cut 1,100 management jobs, including 1 in 10 senior management jobs here in Germany. What's driving this is really a kind of a fundamental shift in the car making business. So a lot of European automakers are really scrambling right now to get ahead of new emission standards that are expected to start being phased in next year in Europe. It's going to make it a lot harder for them to comply with their current set of vehicles. So we've seen a big push by all the major European automakers to do more to develop their electric vehicles. That's one of the reasons why Daimler is cutting back right now, because they're investing about 10 billion euros into this new fleet of electric vehicles that they're supposed to debut by 2022. So it's a really significant cost. It's a significant investment for them over the next several years, and they really have to start cutting back wherever they can. Another area that they've mentioned potentially finding some breathing room in terms of costs is they've also asked not to. They've said they may not be giving raises for a while. So that's obviously going to be highly contested here. There's a union that's obviously going to push back, but I think we'll see a lot more information on where they expect the other cost cuts to come from on Thursday.
Okay. All right, let's look at the markets in general. Global stocks started the week on the back foot, with Asian and European stocks sliding. And of course, we saw the US indices also pointing to declines after reaching record highs last week. What's going to be driving the market this week?
I think this week, like every recent week, is going to be driven a lot by trade headlines. We saw last week U.S. indexes, European stocks were all trading near records, or at least records for the recent months, because of optimism on trade. That sort of had some steam taken out of it on Friday, whenever Trump did say he hadn't agreed to roll back tariffs. So I think any sort of trade headlines are definitely going to be in focus. There's also going to be some interesting economic data. Here in Germany, we're expecting third quarter GDP for Germany. And the big question there is, did Germany fall into a technical recession in the third quarter, because growth contracted by 0.1% in the second quarter? It's not clear yet if Germany is in a recession. So that's going to be very important. In the U.S., inflation data, retail sales data is also going to be really closely watched as these questions continue to swirl about the health of the U.S. economy. And in terms of policymaking, obviously, we've already discussed the ECB Governing Council meeting on Wednesday, but also on Wednesday, the Federal Reserve Chair, Jerome Powell, is going to be speaking to Congress about the economic outlook. So a lot of potential market-moving news about the health of the global economy this week.
So I guess we have quite a lot to chew in the week. So let's keep an eye on those developments and enjoy the rest of the day, Chelsea. All right, in the UK, the economy grew by 0.3% in the third quarter of the year, avoiding falling into recession following its 0.2% contraction in the second quarter. This and more are what Juliana will be talking to us about. Hello, Juliana. A very good afternoon to you. Well, UK escapes falling into recession with a growth of 0.3% in the third quarter. What sectors actually drove this growth?
Good afternoon, Chimizzy. Well, the sectors that grew the growth were the services sector. We know the services sector contributes 80% of GDP to the economy of the UK. So it shows that in July in particular, people were still out spending, they were shopping, and there seems to be some confidence in the UK. So that's a good thing. But we have seen that manufacturing and industrialisation in the UK isn't great. So, of course, the wider picture is that at least there is some sort of growth. And as you said, we managed after that 0.2% contraction in the second quarter to stay clear from a recession for at least this year. But, looking much closer at the data, it still does show that this is the slowest growth the UK has seen in the past 10 years. Of course, last year we had a stark warning from the Bank of England, even though they kept interest rates the same at 0.75%. It was the first time in nearly 2 years that two of the policy committee members were keen to cut interest rates. So the economy at the whole is not really in good shape. But I think particularly Boris Johnson and some economists are breathing a sigh of relief that at least going into 2020, the UK economy isn't shrinking.
All right, aside from this economic data, A number of deals on board. British Steel deal with Jingia. Oh, well, that's tongue twisting, actually. Of course, we have takeover of battle for Just Eat. That is heating up again. How are all of these developments driving sentiment in the markets today?
Well, as you said, Chimi, it's a tongue twister of a day when it comes to the markets. There are so many different headlines coming out east and west. But at intraday, the FTSE is really in a mild state of depression. It hasn't picked up from the morning after it was taking its cue from the Asian markets. Of course, those violent protests in Hong Kong are really weighing on equities in Asia and closer to home in Europe. The political deadlock that's facing the Spanish government at the moment is really also taking its toll. But let's have a look at those numbers. The FTSE All-Share is down 0.97%. The FTSE 100 is down by a whopping 1.10%. And the FTSE 250 is down by 0.38%. In currencies, I think that GDP data has really lifted sterling. British pound is up on the US dollar by 0.42%, up on the euro by 0.29%, and up on the Japanese yen by 0.16%.
All right, Juliana, it's a brand new week. What's on board for this week? What should we look out for?
Well, of course, you can't be in the UK if you're not talking about Brexit. We'll be talking about the election. It's the second week of the campaign. So really, the politicians now are going into full gear. And we have had the British lobby of businesses speaking, the Federation of British Businesses. They're the biggest British business lobby group. That's another tongue twister. And they've been speaking out. And really what they're saying is that this is the most direst period for businesses in the UK for absolute decades, even though it may appear as if the Conservatives and Sajid Javid, the Chancellor of the Exchequer, is putting a focus on British businesses. They say that's not happening and there's just so much uncertainty. So they're insisting and urging politicians over the next couple of weeks to just really be clear for businesses about where they'll be investing. They want to remove the deadlock and the paralysis that has affected the entirety of the UK, but in particular the city. So they are speaking out with a stark warning. So it'll be interesting to see over the next few days just how MPs react to that, away from all the mudslinging.
Oh, sure. I see. It's a busy one for you and I. So let's keep following those developments there. Thank you for your time and enjoy the rest of the day.
Thank you.
And in Asia, markets saw losses throughout the region today as shares in Hong Kong tumbled amid worsening tensions in the city. Chinese mainland markets chalked up losses by the close. The Shanghai Composite was down 1.83% and the Shenzhen Composite declined 2.26%. In Hong Kong, the Hang Seng Index was deep in negative territory, declining 2.62%. Japan's Nikkei 225 reversed early gains to trade down 0.26%, while the Topix Index edged down to 1,704 points. South Korea's Kospi fell 0.61%. In Australia, the benchmark ASX 200 defied the general downward trend in the region and rose 0.72%. And in the U.S. today is Veteran Day, but equities markets are open as stock index futures were lower in the morning. At around 1:30 a.m. Eastern Time, Dow futures fell 105 points, indicated a negative open of more than 121 points. Futures on the S&P and Nasdaq were both lower as well. Our investors are closely monitoring news on the China-U.S. trade front after President Donald Trump said on Friday that he had not agreed to scrap tariffs on Chinese goods. Market players are also following new demonstrations in Hong Kong. On the data front, there is no data releases scheduled. The bond market is closed today due to Veterans Day. In corporate news, grocery outlet and Tencent Music are set to report after the bell. And away from the equities market and back here on the African continent, the Chief Executive Officer of Zimbabwe Stock Exchange, Justin Ebony, says the 80% currency crash since a peg to the US dollar has ravaged stock market values to the lowest in a decade of $1.9 billion. According to him, the devaluation of the currency has also caused a dislocation in stock market valuations as some firms are trading below the replacement values at their plants and investor sentiment is negative. All right, we'll take a quick break, and when we come back, we'll look at what is happening in South Africa as the Africa Investment Forum begins today. Just stay with us.